We start today's market talk. It's an uneasy market because the global backdrop remains treacherous. Geopolitics can flare up anytime. Central banks may tighten the interest rates, which may impact consumption. Hence, the markets, that is, the Indian markets, are not giving you a clear buy signal like that. They are not going anywhere. So right now, the only way out is right wherever there is a momentum, but stay near the exit. So that is the only thing possible right now. Okay, market outlook. Uh, so the question is, could we finally be seeing a glimmer of hope that the Strait of Hormuz will reopen soon? Because that is what the markets are indicating. Indications, we were discussing that these are the indications. So now let's see that. See, Brent crude corrected around 12% last week, right? Uh, Rupee is below 96 or even 95 now, so it has strengthened. The Indian bond yields have come down from they were going above 7.1, it has come to around 7. Then dollar index has come down a bit, so dollar has softened. So that is good for emerging markets currency. VIX has declined. VIX declined around 9% last week. So all these are indicators that these are the indicators that probably the markets are factoring that things are going to cool down. What is actually being discussed is a MOU that extends the ceasefire by 60 days, during which an agreement between US and Iran is expected to be reached. What has happened is West Asia war has again brought India's energy vulnerability into sharp focus. What has happened in this war is that Iranian regime has discovered the strategic value of Strait of Hormuz. It's a discovery for them. They were ignorant about it, and hence because of that, confidence in reliability of transit through Strait of Hormuz has been shaken and will remain fragile even once a resolution to the immediate conflict is reached. So oil prices are not coming down to 60 $65 a barrel, and it's a problem for India because India imports 90% of crude oil requirements and gas and other issues. So till the time, as we were discussing earlier, till the time to a sensible FI which is going to put in large amount of money, oblique FDI, if India cannot clearly show that they will achieve energy security, they will not come back here. Simple. Now everybody is talking about AI. AI is being adopted across industries in India. Now let's see who all are gainers of that. We all know that who all will lose, that is IT services and all, but who all will gain? First is, as I have, there may be many, but as I have understood, first is data patterns. It is aiming for shorter execution cycle through the integration of AI across product development and manufacturing processes, improving turnaround time. Is evolving into an AI-led consumer platform across optometry, supply chain, manufacturing, and customer acquisition. So, in case you are able to do a remote optometry, it increases your optometry is basically testing of eyes. So, if you can do that with a specialist remotely, it will increase the sales. Bajaj Finance, it relies heavily on AI for decision making and to cross-sell insurance and personal loans. Apple uses AI to optimize mobile ad targeting and user conversion for global brands. Bosch, it is using automated quality inspection and predictive maintenance algos on heavy machinery. So it is getting adopted and it will improve the margins and efficiency of various companies. So we have seen these. Now coming to FIDI data. So if you see on Friday, FIs sold in index futures, sold calls in index options, and bought puts. Bought puts, that is in index options, sold in cash, and they are strongly bearish. Rose, They bought in index futures, bought calls and bought puts. So they are kind of indecisive. That means they are somewhere in between. But clients, if you see, they bought in index futures, bought calls in index options, and sold puts in index options. They are strongly bullish, and the buying by the FIs in cash was somehow absorbed by the DIs. Now, seeing the monthly data for the month of May, so if you see this week there were 4 trading days. On Monday, the FIs were bullish. They bought a little bit in cash, and they bought in index futures, sold puts, bought calls. Markets were up 1.32%. It topped 24,000. And then on the major move on 29th May, that is Friday, they sold in cash. They sold index futures. They bought puts and they sold calls. And the market declined 1.5%. So now, as on next week, they are going in, FIs are going in net short. So let's see what happens from here. And knowing that there is some kind of a talk going on around the MOU between US and Iran, it is very surprising that they have taken such a strong position. Now coming to the US markets, so you see there is easing geopolitical tension, softer inflation reading in the US, and strong corporate earnings uh, related to AI-driven growth, etc. So the bond yields in the US have come down a bit. Gold also is taken support, as I had mentioned, around 4,400 level, $4,400 to an ounce level. So that is where the gold is taking support, and silver at around $70 to the ounce. So both of them are correcting right now, or right now they don't have any momentum. Copper moved up, basically on the premise that there would be more growth, etc., and more demand. Bitcoin also corrected. It is also because now people are thinking that it is no longer a safe haven. S&P 500, that is all US indices, were up, so it's made a fresh high here. Similarly with Nasdaq and Dow Jones. So all US indices moved higher. There's so much of optimism around AI-led growth there. In terms of India, now if you see here, Nifty, this is a weekly chart. So bearish red candle, it broke that support and has come down to low of 23,800. Seamlessly broke that, and now it has come down below. So currently the chart structure and RSI show that Nifty is poised to remain range bound. So if you see even RSI on the weekly charts, it's around 41, and if you see on the daily charts, it's around 43. So if you see here, 23,800 was the support, and on Monday Nifty had gone above that, then got resistance at 50 EMA, couldn't take it out, so 24,000 remains a resistance, and then sold off. So range now is 24,000 to 23,250. Sharp sell-off during last hour on Friday has shifted short-term bias in favor of bears. All moving averages, if you see, they have flattened out, indicating a lack of trend. Coming to Nifty Bank, failed to sustain above 55,500 odd level, so it corrected, moved down sharply. Weekly chart is a bearish candle. So if you see a bearish candle with a long upper shadow, reflecting selling pressure at the high levels. Now coming to daily charts, again, with daily RSI is around 46, shows no decisive momentum. So even for Nifty Bank, 53 5 lower levels, 53,500 odd remains to this 53,000. This remains a support, and 50 EMA at 55,200. remains resistance. Now, one index which is now has somewhere the support was at around 26,000, that is Nifty IT, and now it is little bit bouncing from there, is Nifty IT. So it is showing some kind of a momentum, and it is rising from oversold levels. So we'll have to watch out for this. Midcaps maintained their momentum, made a fresh high, then it sold off on Friday. Similarly, small caps, same 1% up, went higher but sold off. So let's see what happens next week. HDFC Bank remains weak because of certain corporate governance issue. It has come down to these lower levels. Generally, around these levels, people are, and it is oversold on weekly charts. So people are waiting for what RBI says and all that. But I think somewhere around these levels, buying should emerge. Not a big deal what is happening. Every bank does the same thing. Reliance again took support, is now poised at the 200 EMA on the, that is the support it is taking at around 1310 odd. So it is based there now. So let's see if it can bounce from here. And now there is a positive news about reducing of windfall tax and all that on exports of diesel and petrol. LNT, this is a good chart. It took support at 200 EMA. In May, it took support there and has bounced from there. Now, showing bullish momentum. Now, if you see RSI, it is moving up, has crossed 60, made a symmetrical triangle, and now it is breaking out from there. So, in case this breakout sustains and it sustains above 4050, 60 levels, it can easily head to 4400. So, just watch out for this stock now. This will move in direct proportion to the resolution of conflict, and see it went up with large volumes also. So keep it on your horizon. Other stocks which are in momentum are Hitachi Energy, Netweb, Wockhardt, Aditya Infotech, Thermax, etc. Now I'll cover two stocks. First is Minda Corp. It's a significant player in global automotive industry for 6 decades. Now the business verticals are vehicle access, electric distribution, lightweight plastics, driver information system, EV systems, and electronics. Now it has a well diversified product range, expanding core verticals to future growth. So two-wheeler vehicle access, four-wheeler vehicle access, sunroof and power lift gate, motors, handle assembly, turbocharger, interior plastics, aftermarket switches, EV charging, EV powertrain, two-wheeler, three-wheeler, four-wheeler, EV wiring harness, EV mobility, smart electronics, ADAS, IRAS sensor, driver information system, etc. So it is in all segments of automobiles. Now coming to the last quarter's earnings, revenues were up 29%, EBITDA up 33%, margins were higher 37 basis points, and PAT was up 138%, and for the full year, the profit grew 40%. So good earnings. It has number of strategic partnerships like with Toyo Denso for advanced switches, then in US, in India for EVQ for EV charging solutions, mechanical keys, vehicle access, antenna systems, wiring harness in Japan, electrical distribution with China, with flash motor controllers in India, turn tide for motor controllers in UK. We'll discuss this. Sunroof, power taillight in Taiwan. So it has got 11 strong partners with domestic and global clients to drive the automotive transition. So, firstly, about with Turntide, it's a collaboration, 4951 joint venture to deliver premium localized solutions for EV ecosystem. So they have basically for motors and pumps and motor controllers access to, and they will gain is access to advanced motor technology. Then with Toyo Denso, again it's a good partnership. Electromechanical switches, electronics and sensors, So it gives them a good opportunity of 10,000 crore to 12,000 crore for the market size is in Toyo with Toyo Denso for electrical switches. So it's a 60-40 joint venture. Automotive switches for two-wheelers, passenger cars, and other automotive segments of the Indian market. Then with Flash Electronics in India, uh, and if you see here for electrical and electronics and powertrain components, and if you see this Flash JV, uh, the if you see here the profit is up 58% year on year, EBITDA is up 39%, and revenue is up 17%. So margins have improved, and this thing is doing well. Six manufacturing facilities in India, two manufacturing facilities in Germany and Hungary. So just as it is evolving into a conventional auto component manufacturer from a conventional auto component manufacturer into a high value technology driven mobility solutions provider. Product strategy in Q4 FY26 reflect a strong shift towards premiumization, platform level offering, and EV focused technologies across segments. By product mix, wiring harness is the largest contributor, then vehicle access, clusters, die casting. Segment-wise, two-wheelers revenue grew for 26% year-on-year. CV revenues grew 25%, while PV revenues expanded by 12, greater than 12%. Supported by rising electronic content per vehicle, higher kit values, and increasing platform level wins. It expanded its premium PV portfolio with a lifetime sunroof order valued at 1,050 crore, with mass production expected to commence in next 4 to 5 months. A peak ramp up likely in FY28. Multiple orders for advanced TFT instrument clusters. TFT is thin film transistor, that is that high resolution liquid crystal display which are there now in all cars and for basically four wheelers. 3-inch to 15-inch displays across PVs and CV segments supported by rising premium content per vehicle. Toyo Denso Japan, which we discussed, JV secured new switch orders from leading Japanese OEMs with start of production targeted for Q4 FY27. In EV space, the newly formed Turntide Technologies UK JV strengthens its presence in axial flux motors and motor controllers for compact EV architectures across two-wheeler, three-wheeler, and CV segments. Through its Turntide Technology JV and Poland Technical Center, the company is actively developing magnetless motors, axial flux technologies, and X-in-one EV powertrain solutions. Now, if you see, everybody is trying to obviate the China angle for magnets and trying to make uh, use technologies to avoid those magnets. So all everybody wants the magnetless motors, and X in one is a EV powertrain which fuses the motor, transmission, and power electronics into one physical housing. So otherwise, you have a wire harnesses connecting all of them. If you put all of them into one, so it reduces the losses and reduces the space requirement, etc. in the vehicle. So is this they are working on this. It reported a record lifetime order book of around 10,000 crore during FY26, with Q4 alone contributing around 3,500 crore worth of new wins. 20% of order book originated from export markets. Order pipeline remains diversified across sunroofs, wiring harnesses, TFT clusters. TPMS is tire pressure monitoring system, switches, and EV solutions with a typical execution life cycle of 48 to 60 months, thereby providing sustained revenue visibility over the medium term. Expect 16 to 18% CAGR growth in FY26 to FY28. EBITDA margins are projected to stay above 11%, driven by operating leverage, product mix enhancement, and contribution from new EV programs. So if you see by product, it is generally equally distributed in FY26. 5 and FY26 wiring harness has slightly increased, and second is vehicle access. By geography, it is India remains the prominent 89% in FY26, while Southeast Asia, Europe, and North America is the balance. By end market, if you see there, 48% is coming from Revenue is coming from two and three wheelers, and balance from commercial vehicle, passenger vehicles, and aftermarket. For next year, they are projected to do around uh, 7,249 crore of revenue and 472 crore of PAT. So they are expected to do around 17-18% of sales growth CAGR. EBITDA margins are expected to improve. ROE is improving. EPS they will do around 19.8 to 25.4 in FY28, taking a mean of around 22. Remember that, and just 30% plus uh, e- uh, PAT growth, EPS growth. So now, if you see this chart, we remember the mean EPS we had taken is 22. So this is around 29, 30 times, and they are growing at 30. The profit is also expected to grow at 30x. So this is 1x PG. So not very expensive, and it is breaking out. So in my opinion, uh, somewhere here, if you can buy this 600, 620, it can give you very quickly, once it breaks out above this 640, 645 levels, it can quickly move to 700 odd levels. So it's a buy on dips stock, and it is breaking out. So and with decent volume, so it is looking good on charts. Last 2 weeks it has broken out. So just keep that in mind. Next is Triveni turbines. It's a top two. It is within top two globally in terms of industrial steam turbines, uh, and it makes industrial and renewable heat and power solutions turbines below 100 megawatts. So that is their strength, and they have customers across 20 plus industries, global customers, etc. So they have a decent business. Now they are providing condensing steam turbine, back pressure steam turbines, where applications area renewable power generation, other power generation application, combined heat and power application industrial segment. This is one which is becoming very popular right now. And energy efficient API, American Petroleum Institute turbines. These are special turbines because they are not expected to stop. They are basically used in refineries, so the turbine cannot stop. So it has to be made of a better material, and so these kind of licenses are not easy to get. Now coming to their quarterly performance, the revenue grew 26%. EBITDA only grew 6% because the margins declined, and profit after tax was up 8% because the margins have declined from 21 to 18%. So the margins have declined. Why the margins have declined is because of lower spare sales, MTM forex loss 85 crore, and execution of NTPC strategic order of energy storage system at 3% PBT margin. So it is not nothing great, right? Because people say we've got an order from NTPC and all that, but all these PSU give orders at very lower margins and all that, and these people just so that they have to keep their business running, just take orders, but the margins come down. It is dominating the global market for industrial steam turbines up to 100 megawatt. It is part of global decarbonization trends, captive power setups, and industrial waste heat recovery demands. Order inflow rose 19% to 750 crore. Past 6 quarters averaged of 550 crore, led by strong aftermarket service intake of 380 crore. Export orders jumped 174%. So they are exporting more, led by demand across key markets of Europe, Turkey, and Southeast Asia. Growth in Europe and Southeast Asia is driven by renewable energy application and industrial capex. In aftermarket refurbishment, growth scope is immense, led by USA and Africa. API turbines, we discussed, inquiry book from India, USA, and Africa is high due to elevated crude prices. Middle East can also see rise in inquiry once the conflict eases, because all those refineries have to be brought into working condition again, and more refineries are coming up. Many data centers in USA are converting from gas turbines to CCPP and geothermal source. Now CCPP is combined cycle power plants, because what happens is if you use normal generators as a backup, what happens is it produces a lot of heat and efficiency around 30-35%. Now, what happens here is it pairs a gas turbine with a steam turbine. So, when natural gas combusts to turn the primary gas turbine, see, you burn natural gas, it turns the primary gas turbine, which is used in data centers. The superheated exhaust gas is captured and directed into a heat recovery steam generator instead of being wasted. So what happens is that heat recovery steam generator uses residual heat to boil water into high pressure steam, which then drives a secondary steam turbine to generate additional electricity. So, it's very easy thinking to think that anybody making a generator in India will benefit because of uh, data centers are coming out. People are going into specialist, even power backups and all those issues. So it is right now market is too easy and just doing easy investing and all that. Uh, For 3 megawatt of a gas turbine, 1 megawatt of steam turbine can be put to improve efficiency from 30 to 35% in gas turbine to 50% in combined cycle. Uh, CCPP takes away gas exhaust of the gas turbine. So that is how it is being used. And geothermal is you bore a hole inside the earth where there is a hot rock, send in water, it comes out as a hot water and steam, and then it drives the turbine. It reduces the pollution and all, because all places in nobody wants higher pollution and heating because of high requirement of power from data centers. Working capital days have crept up considerably to around 180 days, with debtor days expanding to roughly 107 days. So that is a concern. This expansion requires monitoring to ensure capital isn't tied up needlessly in receivables. So as you see in the segment wise, exports grew more in March quarter as compared to domestic revenue, and turbines grew 30% while aftermarket grew 16%. Revenue mix, if you see, domestic is lesser, exports is around 60, and domestic is around 39.9 or 40. So if you see order intake, also exports have shown more growth as compared to domestic, and aftermarket has shown more growth as compared year on year as compared to domestic. But you can't really make any big judgment out of it. Order intake mix, if you see, again, fresh order intake, more is of exports, less of domestic, and turbines and aftermarket is generally the same. But if you see here, order backlog also, it is generally equal, or in terms of 20,000 odd crores of, 2,000 crore of order book, and they do around 600 crore in a quarter. So this is okay for a year, and so this is generally equal. And turbines is 1,500 odd crore, and the balance is aftermarkets. Order backlog again, uh, mix wise, turbines is higher and aftermarket is lower. So generally, but aftermarket is improving. So share of domestic and export sales. So if you see, export sales have increased over, now it is 58% in FY26, and aftermarket is now 27, and product is 73. So turbine sales are more, especially exports. But order book wise, if you see, there is a decline in terms of turbine order book. There is a decline, and aftermarket there is a rise. So there is more of aftermarket is also has regular earnings, so that is good. But overall, if you see, there is a strong and consistently improving performance over the years. So revenue CAGR is 26%, EBITDA CAGR is 29%, but the margins have come down, and PBT and PBT margins also, PBT CAGR is 31% over last 5 years, but margins have come down. So that is a concern that has to be watched along with the debtor days and etc. So they are expected to do around, as I told you, 600 odd crores in a quarter. 2,483 crore in FY27 with a profit of 413 crore. So they will do around 14% revenue growth in FY27, and EPS growth should be around 18%. EBITDA will be down for FY27, is expected to be down. Return ratios are stable at 26%. Debtor days have increased. So this needs to be monitored because that is creating a cash flow problem. Adjusted EPS is around 30 knot, and PE is for FY27 and 16.5 for FY28. PE is 45 and 36, so it will be around 40 or as a combined thing. Now, if you see the chart, this has really broken out and is now overbought. So at these price, you can't buy this with all these problems. But basically, it is going up because of data center and other themes, etc. And there must be some buying which is taking place here. It has corrected, so it comes down to this 680, 640 levels. That is the time to buy this, but only on dips because now it is overbought, so it has to correct. I have finished. Okay, I'll talk about real estate investments also. Real estate investment trusts, REITs, they are essentially the mutual fund of real estate. They pool investor money to buy, manage, and operate a portfolio of premium, high-value commercial properties like IT parks, office buildings, and shopping malls. Malls. So basically, it is with small amount of money you can't put money in real estate. So that is a kind of a mutual fund of a real estate. You can put small amount of money. Now there are various types of REITs in India. There are five of them which are office focused: Embassy Office, Mindspace Business, Brookfield India Real Estate, Knowledge Realty Trust, and Bag Money Prime Office REIT. Then there is a retail mall focused also, Nexus Select Trust. Now, what is the mandate is that REITs must distribute at least 90% of their net distributable cash flows to unit holders. These payouts are usually made quarterly, acting as a reliable stream of passive income. They are highly sensitive to the broader interest rate cycle. When interest rates or 10-year government bond yields rise, traditional fixed income products like fixed deposits look more attractive right now, which can cause investors to rotate money out of REITs. So that is a concern because they target an overall dividend distribution yield in the ballpark around 6 to 9%, but generally I've seen max is 7.5%, supplemented by potential long-term capital appreciation of the underlying properties. But what I have observed is whenever the interest rate starts going up, the REIT prices also starts going down. So though the dividend and distribution amount may remain 6-7%, but that also starts going down. They provide a transparent, professionally managed gateway to institutional real estate that was historically off limits to individual retail capital. So that is an advantage. SEBI reclassified REITs as equity-related instruments for mutual funds and institutional players. This structural shift allows mutual funds to aggressively include them under equity allocation limits rather than classifying them under hybrid or debt tax. So that should help them because once mutual funds start buying them as equity, so that will increase the people buying them, which is expected to bring substantial institutional liquidity into the sector over the long term. Now, the most important part is taxation framework, which you must understand. Because REITs payout is bundled into different components: dividend, interest, and amortization and rental income. The taxation depends on how the trust structures its distribution. So the interest and rental income is taxed at your individual income tax slab rates. Dividend income is generally tax exempt if the underlying special purpose vehicle hasn't opted for lower corporate tax. Otherwise, tax at your slab rate. And then short-term capital gains, units sold within 12 months are taxed at 20%. Long-term capital gains, unit held over 12 months are taxed at 12 and a half. So this is taxed as per equity. So that is the advantage, but one has to be careful as to what is the return and how much are they paying you, etc. So, but if say some property which is not used by the people for some time, it lies vacant, a commercial property, then their earnings also fall. So I finish now. We will take questions.